Okay, we're good to go.
Okay.
So, first question is, does many of our discussions center on understanding success or making crucial decisions? Today we are trying to account for failure. We begin the group discussion, quickly reconstruct the key elements of the key financial business model. So the customer value proposition, the go-to-market plan, technology, operations strategy, and cash flow formula. So what are the key elements, do you guys think, to the customer value proposition?
Okay, we must get it from the case like itself, or it's like any given value proposition.
Yeah, I think it's like our idea or our understanding of what that was, and we're pretty much just rebuilding the same business model he had from the case, but we're kind of explaining it more in words, I guess.
So I guess his model proposition was to create a service where you could share information on your investments, right? You could share that with your friends, with family, and even publicly, because they figured out that people didn't really trust their brokers or their advisors, and information could be available if people could share it with their friends and family, right? So people would pay for stuff like that in a way.
Also, as a marketing strategy, it can be used like, for example, target more customers, or in order to identify another opportunities within the market, or for the customers. I don't know.
So I looked up customer value proposition, and it says a customer value proposition is a business or marketing statement that describes why a customer should buy a product or use a service. So what do you think his customer value proposition was for the company? Considering like what you said was true, Sam, and as well as Miguel, like it pretty much was a service to acquire those who wanted to do investing but weren't keen on the advice of other advisors and everything. So I guess for me the value proposition that I got out of was that um, pretty much for free you could trade and see how top traders are trading as well to follow their techniques.
Okay. So not only family and friends, but professionals, right? They could link it to pretty much everyone and get information that perhaps wasn't really ready and available if they went somewhere else.
Right. And it says here in the case that at the beginning they didn't have a very clear value proposition. When they hired Tony, which was like pretty much the guy that did eBay and art.com and Nike and everything. And pretty much from they went into what they called the arty which is pretty much who they expected to be their main target market. It looks like they built the main.
Their main
hmm
Well, they were targeting pretty much. Well, I mentioned there are about 40 million people that I guess were part of their target market, right?
Right.
But then they didn't realize that men usually don't want to tell others where they're investing. Like they wouldn't share that stuff
hmm
as freely as they thought they would.
Right.
Are we talking about the go-to-market plan?
That was to the customer value proposition.
Mm.
Yeah, we can go into the go-to-market plan.
What was the go-to-market plan?
Pretty much, as far as I understood it, they kind of wanted to do like a pre-test, like a beta test. And then the TechCrunch 40 came out, and they pretty much said, okay, by the deadline that they're having, they have a version 1 out. And so that was kind of the go-to-market plan, was to, in the time frame they had between that and the TechCrunch 40, to pretty much create a system that users could use and have the TechCrunch 40 be their basically marketing for them. That it gets advertised there. A lot of people are looking for new apps, new software, whatever, and that's where they find it. And it worked, but their app or whatever they were using wasn't as user friendly as they thought it would be, and it wasn't converting very many people that went to the site.
Yeah. Well, they had a different scheduled date to launch, I think, until they decided they wanted to go into TechCrunch, right? So they kind of pushed towards that and ended up getting it out.
Right.
But yeah, then their results weren't as good. They weren't getting the conversion they wanted.
Yeah, because originally they wanted to do another time or something like that, and they wanted to pretty much do a beta test first, and then from that beta test, they wanted to then after that do a steady launch, and pretty much go into the market from there.
Yeah. Technology and operations strategy. Technology-wise, they were focusing on the back end. Be able to gather all the information from all the big financial companies. But they weren't able to get all of them at the beginning, right? There was just about 12. So some people were complaining that they didn't have all of them. And then it wasn't that user-friendly, I guess, the front end of the technology. And so they had some problems there.
Yeah. What caught my attention was that he was investing a lot of resources or of money in the different versions of the cake 1.0 or 2.0, but we read in some part about Yodel. I don't know if you have ever used it, but well, caught my attention that it says that it was quite expensive, but also that it didn't, well, that this program was not able to gather enough information from 3 months or something like that. So I just was wondering how much data was needed for Carpenter's system or idea, because it seems like pretty complicated or, well, something that was maybe not very useful, and maybe he just wanted to get all this information, but maybe for the market or for you as a customer, maybe you don't need it. I don't know. What do you think about it?
Well, the reason he didn't use Yodel was kind of the 2 point place. It only had 3 months worth of data, and it was expensive.
Ah, yeah, three
Um,
months. Yeah.
but I think
So
they
he
wanted
wanted
something like,
more.
yeah, they wanted 10 years or something like that, which when you're dealing with like
Oh,
investments and everything, you want as much data as possible so that way you can run pretty much to see if there's any kind of a pattern or record, anything like that, to see where the stock is currently going, things like that. So to have more information is beneficial, especially if you're going to be running an algorithm like they did later on to pretty much show, hey, this is going to be trading like this better, and so on and so forth.
mm-hmm. Mm-hmm.
So any of you guys figured out the cash flow formula? He mentioned it there. They had certain calculations, right? So let me see. So he was calculating that by year 3, which was 2010, he projected 82 million of revenues, with 21% coming from advertising, lead generation, sponsorships, 43 coming from premium services, and 36% from data licensing and fund fees.
Yeah.
That's what he was
But
expecting.
oh yeah, that's what he was expecting.
Was a good idea.
Yeah,
I mean,
pretty much.
well, I don't know. I didn't read that in as much detail or look really into the numbers. So a cash flow formula, didn't really come up with it. I just kind of remember they were thinking to get about 40 million people wanting the service, and it was a 20 billion.
Yeah, they wanted to harness part of the market of the 20 billion market. And I think he said something like he was expecting conversions of like 0.2% from pretty much like people sharing it or talking about it, and people signing up from basically like word of mouth. But he said that was pretty much non-existent and didn't work at all like he expected.
It didn't. So he thought there was a lot of ways to monetize on that idea, but he had to scale it. So overall, I think that the idea was good, but he never got to the point to where there was enough people to actually make a profit.
Right. I think he was thinking he was thinking big, which is good, but it was also bad in his case because he was focusing on the big. He wasn't focusing on, okay, that's where I want to get, but how do I get there? What are the small steps I need to take to get there? Instead, he's just like, oh, we're going to launch it and we're expecting this many people because we did some initial data and it showed that this many people weren't happy with their advisors and so on and so forth. That doesn't necessarily mean that those people wanted an app that would do that for them. It just meant that that many people didn't want that type of a service.
Yeah, I mean, he made some, or he had some, he did some research, but the same case mentioned that perhaps the research that he made wasn't the correct research or the best research. So he had the idea and he was excited about it. He saw a lot of potential and he was very positive about the outcome, but didn't really have, like you said, detail of how to get there, a plan,
Mm-hmm.
or even like a plan B in case something didn't really work. Well, what was he going to do, right? He wasn't expecting really what happened, and I think that was a big risk. He assumed it was going to work out perfectly, kind of like how he had planned out, and I
Right.
guess
Yeah.
that's the biggest mistake.
Actually, if you see the with Exhibit 3, just from 2007 to 2008, he just grew 748%. So I think that's wow. I don't know if companies like Facebook or Twitter have has had this kind of growth with more than almost 1,000%. I don't know. What do you think? I think it was very positive, but I don't know that it was quite real.
Was that projected or was that actual real growth?
That
His
was projected.
projections?
No,
Yeah,
yes,
that was his.
that was his projections, right?
Right.
No, yeah,
Not even
those were his projections. Yeah,
700%.
Yeah.
he, yeah, it's kind of well from zero to I don't remember how many clients or how many people signed up after the tech crunch, but if you go from 0 to 700, that's a big amount of people. If you take that into
Right. Because
consideration.
it shows from February '07 to December of '07 that it had the total revenue of 909,000, and he was kind of like projecting that by 2008 that would go to 7.7 million. So like he's pretty much saying in a year he's going to take
In a
that up
year.
748%, which it's,
Wow.
I mean, it's ambitious. It's
Yeah.
definitely something to strive for, and everybody obviously wants to build a company like that. But I think it would have been more realistic had he looked at it and been like, okay, let's try and do the same thing and double it, and continue to try to double it.
Exactly.
Yeah.
Yeah.
Well, one of my questions was like, if I was a investor and I'd see that, like, it doesn't really
That's
make
a good
sense,
point.
right? Like, how did he get that much money in the first place?
Hmm.
Is it that easy?
I guess so. I guess in that time, maybe people were looking to
Could have
build.
been. Yeah, there's a lot of tech companies coming out, and
Hmm.
who knows? Anyways, it says that after we recreated this, we should vote if we think that cake was doomed from the beginning or was this a promising business model. So what do you guys think? It was it promising or was it doomed from the beginning?
I think it had promise, but because of what he did, it kind of set it up for a failure. If that makes sense. Kind of like a mix of the both. I guess if I had to go for one, I'd say that it was promising.
So you're talking about the idea or you're talking about the business model?
The business model.
Was promising?
Is that what it's the idea or for the business model?
It's asking for the business model.
Okay. Okay.
I guess because you can, yeah, I agree with you. Like it can be two things, right? The idea, I think the idea was good, but then his
Mm-hmm.
business model lacked some experience, perhaps, and some planning.
Right. Well, I think it was because we kind of talked about like if he was too ambitious or if the goals were too ambitious for the business or whatever. And I think he was too ambitious on it. I think he saw the numbers and the drastic amount of people that don't want an advisor. And he's like, wow, I can jump in on this market. I can take this market by storm. And kind of like it says, like the research he did, yeah, it gave him information, but it gave him the right information. Like he didn't know how many of those people would be willing to use an online source or an app or something like that to be able to do trading and everything like that.
Which I think, as they had planned, what with the beta, but then they got a bit excited about TechCrunch and they're like, let's just launch it. It's gonna help us boom. And so they didn't do their beta, they didn't do the test, they didn't see how people were gonna react. And then by the time they spent all this money and invested and created this whole platform and launched it, they saw some success, but it went down all the way. because they hadn't made the correct test. They hadn't launched a beta to see how people were going to react to it. So I think they were pressured, they were pushed, and they got too excited to get it done and get it out. They didn't take they weren't that cautious and taking it a bit slower to develop and test before they launched. So if we were talking about the business model, I think I'm just gonna say it was doomed since the beginning.
I would say the
I mean,
same.
because they changed it. They had a plan and then they changed it. So you can't really do that. You have to stick to the plan and then adjust from there.
Mhm. And I think it was doomed from the beginning as well because the predictions they were setting out and kind of like how much money they thought they were going to get and everything and what they showed to their investors and all that stuff. Like, reasonably, because it's not like he doesn't have experience. This is his first time rodeo kind of a thing. He had like worked with other companies that were basically a startup. So, and he did that with the purpose to gain some knowledge and everything. But you would have thought that like from working at a startup, he could have pretty much said, okay, that's a bit high. Maybe should be more realistic with these numbers or with this business model. Maybe we should figure out who our actual target market is rather than we're just going to try and sign up everybody.
Yeah, I agree. I think that the business model, as itself, as he presented with the investors, it was pretty promising. But and maybe that was the way he could get all the money for investments. But I think that the business plan was done by itself from the beginning because it was not real or not a very um, like achievable. Simple as that.
Yeah. Hey, Nate.
Hey, how are you guys doing?
Good.
Good.
We've gone through question 3, and we're on question 4. Pretty much after we go through recreating the business model, do you think Cake was doomed from the beginning, or do you think that the business model was a promising business model?
Okay. I'll just make a couple comments here. As I read through the case, I thought that the guy Stephen Carpenter was kind of ahead of his time, and he's one of those guys that's kind of a pioneer. And man, you got to execute everything so well because you're the pioneer, right? And I just felt like he had an idea that was ahead of his time, but some of the things he didn't foresee, like the case talked about, his model was based around that people would kind of share and collaborate, like things that are working or investment ideas. And what he didn't see was that people tended not to really share that kind of information. So that was problematic. But his approach to treating investments like with a broad view, like everyone seeing all of their portfolio on like a single pane, that's like a brilliant idea, and we see that today. But back 10 years ago, that was a new idea.
Yeah. And definitely said a lot of the investors even thought that like it had potential for the next upcoming years, for like a couple years to come. So maybe that's why E-Trade bought them out. They saw the potential in it and thought and felt they could do better and had better financial backing. Okay, so question 5 is discuss Stephen's approach to the opportunity. Try to understand what, if anything, Stephen could have done differently that may have produced a better outcome.
Mm-hmm.
And give some examples on page 3 and page 10. But
So I had a question. I'd like to get you guys' opinion on. It sounded like he admitted that it was a mistake to get too much capital up front. Like, why would that be a mistake?
I think it could be a mistake just in the sense because um, it, how could you explain this? Well, the first idea is we didn't really agree on how easy they got money due to the numbers that they were projecting. And the second is that they got money pretty easily and started building and building without having a technology that was really proven. So it's kind of easy to spend someone else's money because it didn't cost much. And so they're running this company and doing their own thing without thinking about, hey, our money's running out. I think if it was their own money, they would probably thought a little bit deeper and a little bit longer about, okay, what are we doing really with this money? Is this actually going to work? It would have taken a little bit more time to think about those details.
Yeah.
yeah, it's true. So I guess the main question for number 5 is, as a group, it says come up with a list of ways Stevens' approach is different from Rent the Runway, Dropbox, and Mint. How do you know which assumption to test first? Was building the data layer first the right approach? What would you have done first? I think the biggest downfall for this company was the fact that the data they did get research on was data based upon an opinion and not an actual, like, hey, we're going to use it a little bit and see if we like it and what are the faults here and what's missing and what would we want and what doesn't have. And he even mentions pretty much that the feedback they got wasn't on a specific product. It was pretty much for the technicalities of it, of like what it's going to do. But people weren't able to play with it and figure out, hey, I don't like this or I like this kind of a thing. Whereas with Rent the Runway, they started talking with other designers and everything like that, and then started changing their opinion based on that, as well as kind of threw out a beta. I think if they would have thrown out a beta with this cake, they could have had a lot better success because they would have known what wasn't working right and what didn't need to be there and what did need to be there.
And you make a great point because Rent the Runway, those guys were obsessive about getting feedback from their users. And those are actual people that are using the product, right? Renting stuff. And with this company, yeah, market research. And if you don't have a finger on what your actual users are doing, how they're actually using a product, that's a problem. That's a great point.
So Rent the Runway did some tests in universities before they even launched, right? These guys, they didn't really test. They were just pushing to get into TechCrunch and launch something that was even new to them. So I didn't really think they even knew what they were pushing. They just heard the idea and they all thought, "Whoa, this is gonna revolutionize the industry." They were excited about the numbers, and they didn't really stop to think, "We haven't tested this, right? What if we're wrong?" There wasn't like a exit plan or there wasn't like a plan B. They were so confident that they never thought about testing, and they just pushed the development of the technology for TechCrunch, and once you hit that volume and you spent all your money, it's kind of hard to like fix that because you have it all there. You already made the investment.
Yeah, I agree. I actually was looking to the graph that he had, and there is just 3% that trust a great deal in advice from other advisor. I don't know if maybe the same culture or the stereotype of this kind of business was also what that make this business idea not profitable, because the same people was not very confident to show or share their information in this kind of platform in this time. So maybe I don't think if the culture by itself could be another reason for this failing.
Yeah. The last question says, identify the main reason for Cake's failure. Was the failure just beyond Stephen's control? What low-cost experiment could Stephen have done to test the assumptions behind the math? The main reason for failure.
The main reason.
I think the main
Wow.
reason for failure is lack of research. He took a big risk. It was a very specific market, a new technology, something people, like you said, it was ahead of its time. And like Nate said, you have to nail every single step. And they just kind of went with a big idea and then stopped to think or to research specific little things. Like they were trying to get on the bus of social media, right? That was one of their big things. Like social media is getting huge, and so we're going to have this platform that kind of allows you to share and be social. And that didn't work. So I think that was one of the biggest.
Yeah, I think that this same market, well, this mistake with the market research lead to this mistaken projection of more than 700 growth percent in just 1 year. So I think that it 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 all is linked or connected for this bad research, and maybe because he didn't have enough advisors or any other companion with experience in this market that could bring some insights or some other ideas in order to have this plan B as we have discussed.
Yeah. I definitely think the failure of the company, because it says was the failure just beyond Stephen's control. It's kind of a confusing question, but I think because they did a lot of research, but they did the wrong research. They didn't do a specific market. They just did everybody, because they were kind of just expecting that everybody would jump on board on this. And obviously that turned out to be false. And like they said with Mint, they said that the majority of the people that were using Mint were women. And women were more social or viral about it, whereas men were more quiet and not social or viral about it at all. And the majority of their people using it was males. And so they said, maybe we should have done that. So I think what they could have done is a low-cost experiment to pretty much to test the assumptions behind the main reason of failure would have been to do a main research like they did at General, and then from that general research be like, okay, these are so many people that don't trust their advisors. These people trust their family and friends. Let's do a survey. If there was an app like this or a service like this, would those friends and family talk to each other and share information? Would they be willing to get on there and look at the portfolios daily? Would they be willing to pay for it? What would they be willing to pay for it? How much would they want to know of what's going on? Like things like that, in order to get more of a specific idea of what consumers, as Nate was saying, how they did Rent the Runaway, they were continually looking for feedback, and on this they just didn't look for that feedback. They just assumed they knew what the customers wanted.
Yeah, I agree. That's a tough one to say. Oh, was it Steven's fault? Well, yeah, he's the CEO. I guess it is his fault ultimately, right? But it's just one of those things, like we're all kind of saying, that the market's not quite ready, or he hasn't like tapped into that segment of the market that's ready, and the product needs to be refined and tuned, and you need to meet the needs of that market, and that's not easy to do. The funny thing is that, you know, we see examples in the internet of these guys that like have outrageous success, like Twitter or Snapchat, or some of these guys, they just can't scale their companies fast enough, right? Because it's growing like crazy. It was almost like he was expecting that kind of, you know, embracing of his product, like it was just going to take off, but it just didn't quite do it that way. That's a tough one, though.
Yeah, I mean, I think he had the right intentions. It seemed like he was trying hard. He was motivated. He truly believed it was going to work, right?
Yeah.
It just kind of happened to be that there were some details that weren't correctly thought of, and it kind of took him into a direction that didn't allow him to scale at the speed that he needed to scale. So it sucks because I was just reading or watching a video about Fortune. I just shared a link. You guys might want to see it. So there's this new company. It's called, let me see. Anyways, it's pretty much the same idea. Being able to get all the financial information online, and they're huge. So you're right, Nate. Like, this was like ahead of his time, and it would have been interesting to see if things came out or worked out differently. So you guys want to check that out?
Yeah, I'll check it out later.
Yeah, I'll check it out too.
Alrighty. Well, I think that's all the questions. Anything else anyone wants to add?
I don't think so. So you guys meet regularly at 7:45 on Wednesday, and then on Sunday evening too.
Mm-hmm.
All right, cool.
Yeah.
Are you in